Hello, friends. Hope you all are doing good. Welcome to travel along with us. This video, we are going to see about the hot topic Bangalore rents are skyrocketing, but it's owning a 1 crore home and renting it out for 30,000 a month. Really worth it? Today, we will break down the numbers, the reality, and whether it is a smart move or just a burden. So let me define you the rental yield. So how we will calculate our rental yield? It is simple. So calculate your annual rent, divide it by the property value and multiply it by 100. So for example, if we take a rent of 3.6 lakhs per annum divided by 1 crore of property worth. So the percentage will be 3.6 percentage. So city-wide yield is 3.8 percentage hardly. So hotspots like Whitefield, Electronic City and Marathalli will yield you around 4 to 6 percentage. So your 1 crore home is underperforming compared to the city's best rental zones. IT boom and hybrid work models fueling demand. So, coming to the next phase, that is Metro Phase 2 and Ring Road projects are improving the connectivity. Tenant preferences shifting towards gated communities, co-living and proximity to tech parks. But raising rent don't always means raising profits for landlords. Coming to the maintenance charge, once you have been done with all your tenants and rent everything, next comes to your mind is maintenance charge. So, rupees 3 to 5 per square feet averagely for per month. Okay. So, property tax and society fees, vacancy risk, repairs and brokerage and tenant turnover cost, net yield often drops below 3% after expenses. So, Bangalore property prices historically appreciate 6 to 10 percentage annually in prime areas. Long-term investors rely more on capital gains than rental yields. So, the real profit isn't in rent, it is in waiting for the property value. So, coming to the profit side, hedge against inflation, asset diversification, tax benefits on home loans. Coming to the burden side, low yield compared to FD like 6 to 7 percentage or equities 10 to 12 percentage. So liquidity issues, hard to sell quickly, stress of management tenants. Coming to the invest in high yield localities like Whitefield, Electronic City and HSR layout. Consider real estate investment trusts for passive rental income. Short-term rentals, Airbnb in prime zones can double yields. Smart investors don't just buy, they strategize. Okay. Now, again I'll recap to you. 1 crore home, 30,000 rent is mediocre yield. Profitable only if property appreciates or if you optimize your rental energy. So, is it profit or burden? The answer depends on whether you are chasing monthly cash flow or long-term capital growth. So, coming to the point, let's take your hypothetical scenario. A property valued at 1 crore rupees, generating a monthly rent of 30,000 rupees. At face value, 30,000 rupees a month. Sounds decent, right? But is it truly profitable for the homeowner? Let's crunch some numbers. So I will tell you some segments. So coming to the segment 1, the landlord's perspective. When evaluating profitability, it is not just about rent collected. There are numerous costs associated with owning and renting out a property. Monthly income. So coming to the monthly rent 30,000 and annual rent is 3,60,000 rupees. So let's look at the expense. This is where it's get interesting. So for a 1 crore property in Bangalore, This can range significantly based on location and property type, but let's estimate rupees 15,000 to 25,000 property tax annually. So let's take rupees 20,000 as an average. Coming to the maintenance. So most apartments have society maintenance. For a decent 2 or 3 BHK, this could be 3,000 to 5,000 per month, adding up to 36,000. So to 60,000 annually. So let's use 48,000 here. Coming to your home loan. This is the biggest factor. If you have taken a loan for 70% of property value, let me figure it out. So 70 lakhs at 8.5 percentage interest over 20 years. Your EMI will be around 61,000 per month. That's almost double your rent. Even if you bought it outright, consider the opportunity cost that I have is 1 crore. What if you invested it elsewhere? Coming to the mutual funds, it will give you 12% return, that is 12 lakhs a year you are foregoing. So coming to the property insurance, a few thousand rupees annually, let's say rupees 5,000. Brokerage fees, every time a new tenant comes in, you might pay a half to 1 month rent as brokerage. Let us assume a tenant stays for 2 years. So you pay rupees 15,000 annually on average. Coming to the repairs and upkeep, see, anyways we require maintenance for our apartments or individual homes. Let it be apartments or let it be individual homes. You need to repair once the tenant goes out, or once if you are shifting from one home to other home, we will be charged. So let us take that charge as coming around 10,000 to 20,000. It includes painting, plumbing, electrical fixation, everything. So vacancy period. If your property stays vacant for a month or two between tenants, that is a loss of 30,000 to 60,000 in rent. Let's factor in 1 month's rent loss per average will be 30,000. That means 1,33,000 annually. So if your annual rental income is 3,60,000 and the expense is 1,33,000, your net income is 2,27,000. Now compare that to a fixed deposit giving 6 to 7 percentage, or equity mutual funds which will give you 12 to 15 percentage. This 2.27 yield is quite low. The primary driver for profitability here isn't rent, but the capital appreciation of the property itself. If your 1 crore property becomes 1.5 crore in 5 years, that's a 50 lakh gain, which vastly overshadows the rental income, but capital appreciation is never guaranteed. So now, for a landlord, especially one with a significant home loan, current rental yield often barely covers the EMI, let alone generating substantial profit. It's often more about securing an asset and betting on future appreciation. If the property is fully paid off, it provides a decent passive income, but the yield is still not spectacular compared to other investment avenues. Agreed? If you agreed, please comment below. Bengaluru's rental market is a complex beast driven by unique economic forces. It highlights the vast difference between asset market value and immediate income generating capacity. Both landlords and tenants are navigating a challenging landscape. So, coming to what are your thoughts? These are all my thoughts. So, have you experienced Bangalore's rental market? Share your stories and opinions in the comments below. Don't forget to like this video, subscribe to the channel for more financial insights, and hit that notification bell. Thank you friends. Thanks for watching this video.